What's going on? Welcome back to the channel. So today we're going to talk to you about Opendoor. I want to go over some expectations for this upcoming week, what might cause some volatility in the stock price, and go over everything else you need to know. But first, make sure you guys hit that thumbs up. And with that, let's get right to it. So starting off with macro data. I know right now the market's very doom and gloomish. People are seeing cryptocurrency really sell off over the weekend, and usually this is a extension of people's appetite for risk. So I think people are assuming Monday is going to be a pretty bad day, but there's a lot of big data coming out this week that could really change that. So getting right to it, on Monday we have ISM manufacturing. Current forecast is 48.2. Anything above 50 shows more of an expansion. Anything below 50 shows more of a contraction. Similarly, we also have global manufacturing. Current forecast for that is 51.9. I don't think the market's too concerned over the manufacturing data because over the last 2-3 weeks, it's been on point. So there's been no real reason to be concerned. Tuesday though, so Powell's recent comments about labor on how in the eyes of the feds, technically labor's been stagnant, if not improving. If JOLT numbers come in a little bit negative, this is where you could have the market get a little bit more optimistic associated to a March rate cut. So that's going to be coming out first thing. Wednesday, we have mortgage applications, mortgage market index. Both of them kind of showed some weakness last report. Didn't really affect the market all that much, but this time around, again, that could really possibly push Opendoor a little bit higher because of that. But later that day, we also do have ADP employment. Current forecast is 35,000. Then ISM services. So nothing too crazy in my opinion. On Thursday, we have challenger job cuts, another labor linked data point, initial jobs claims, a couple of Fed speakers here and there. Friday is going to be the big day for at least data. So we have non-farm payroll, unemployment, and then Michigan consumer sentiment. So this definitely will shake things up quite a lot and hopefully have the market forgetting what Powell kind of recently stated. As far as companies putting out their earnings, so last week, as I've mentioned in previous videos, we did have Microsoft really doing good on their earnings. So they did beat on their top and bottom line, but their future guidance was somewhat iffy. So that caused a lot of kind of people out there to say that AI is a bubble and slowing, blah, blah, blah. So in general, this upcoming week, we could either have the market double down on that based on a lot of these companies, their future guidance, or it might actually reassure the market. So for instance, we have Palantir, we have Alphabet, ARM, Amazon. So a lot of big companies putting out their earnings that could really change things quite significantly. Plus, we're starting to get more and more of the financial stocks. So depending on what they give for future guidance as well, that could potentially show some insight on consumers, and that could really help Opendoor. But one thing as well that might really affect Monday is that whole government shutdown. Based on Johnson, it looks like they're anticipating for the shutdown to end at least by Tuesday. So that's kind of a positive thing. So we'll have to kind of wait and see how that does play out. Nothing really specific to Opendoor for this upcoming week. So they did announce on Friday the date of their earnings, and this is something that I did mention in my last weekend video on some expectations. So I said it's either going to be at the end of the week, if not early this upcoming week. So they did put it out Friday. So their earnings is slated for February the 19th. So right around the corner. So that should be good. Closer to that date, I'll give you a little bit more of a deeper dive in what Wall Street will be really paying attention to, what they will like, what they won't, and things along those lines. Kaz only posted this. This is kind of the only thing to really worthwhile to bring up. So we're going to add a couple of product managers to our team at Opendoor. So still, we've already seen some insight to what they are hiring for, what they kind of have planned. So AI is going to be a very big deal for Opendoor going in the foreseeable future. So something, again, just to kind of keep in mind. But aside from that, looking at shorts, 15.43% of the free floats being shorted. So that's what we're going into this upcoming week with. 120.71 million shares overall being shorted. DTC sitting at 1.43 days. So shows that shorts are really overextended and they're kind of putting themselves in a sticky bind. But some of this going higher is also because Opendoor itself is experiencing lower volume. So That's where the DTC does factor in the average volume in comparison to number of shares being shorted. So that's why some of this kind of shows and might be a little bit more misleading why it's going higher. Cost to borrow, very low. So as of right now, you do see two signs of manipulation. You have more shares being shorted than on a loan, so there's a little bit more of a naked shorting type of scenario. Plus, cost to borrow minimum is negative 0.19%. So that does mean that there is a broker out there physically paying people to short Opendoor. So maybe in my next video, Opendoor video, I'll go over possibly who that broker might be. But aside from that, from a bull standpoint, you see a consensus for it to be roughly around 6 to 650. Bears are anticipating for it to be sub 5. Couple key levels to watch for though, with it at 515, it is right above this S2. So early on in the week, Opendoor really does need to hold this 510. Regrettably, if the broader market does sell off, then anticipate that 510 to really break. As I've mentioned as well, Opendoor shorts are very strategic. They like to double and triple down at these key levels. So they might really hit Opendoor hard on Monday to break it below this S2, because the next strong support would be 428. So that would be kind of crazy. As I've mentioned on my video on Friday, I think it was, that might be potentially the bottom where it might have a nice V-shaped recovery, but still for face value on Monday and Tuesday, just watch for that 510. Aside from all of that fun stuff, on the actual chart itself, I'd like to say that this is good and it looks optimistic, but it really doesn't. So over the last 5 days alone, it went down 19.78%. Many other growth and speculative stocks kind of did as well, but this 200-day moving average sitting at 448 is also that key level as well based on the fibs. So this is where I did say that most likely we could bounce off of that if things don't kind of calm in the broader market. So just watch for that 200-day moving average. Looking at the market position though, you do see not that much willing buyers. So this is where you could see some crazy price action. There really hasn't been that much in articles coming out associated to Opendoor, no new analyst ratings. So it is going to be a fairly volatile week, but as I mentioned at the very beginning, there could be a lot of good opportunity for the market to get a lot more optimistic and really push higher. So let me know your thoughts on Opendoor. Are you buying? Are you selling? What are you generally doing? One final thing, pop over to my Patreon if you're looking for some solid on-point buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that, appreciate all of you watching.